whatever you want to do. But the reason why you're doing all that business, the reason why is real estate. Real estate. So why real estate? Anybody want to tell me why? Well, it's real. That's a great question. Great answer. Anything outside is real. You have to sleep somewhere. But also, where are we sitting right now? Real estate. Where do you live? Where do you work?
Real estate.
Where do you go to eat?
Real
estate. So why not own some of the real estate? So I don't care what business you want to get into. I don't care. It could be great business. It could make a lot of money. But the whole point, the end goal, is to end up with some real estate in your portfolio. It's that simple. Or own the place where you do your business. It's that simple. Because remember, the more you have, the more shall be given to you. Because this church right here rents this building. I'm gonna say own it, which is great too.
Own it.
Oh, you own it?
Yeah.
Hey! So be like the church. Be like the church. Own some real estate. Own it. Why do you want to own it? Exactly. Own some piece of land. Own some piece of land. And the reason why, like I said, is because a couple of things. And we want to build a business. We want to build a real estate business. And why? Because there's a couple of things that happens with real estate. All right? This is the reason why we own real estate. The previous speakers talked about repeat customers. Repeat customers. So I own buildings all over the state, all over the states. All right? And the reason I do this is because I'm helping myself by diversifying my portfolio. All right? But the reason why real estate is because four things. And this is for any business too that you want to own and want to start. All right? So any business. But this is specifically for real estate. All right? The first thing is appreciation. All right? Any business that you start should have some kind of appreciation. So every single year, it should be increasing in value. Not decreasing, but increasing in value. Every single year. So your business should be increasing in value. Real estate is almost guaranteed to increase in value. Average about 5% a year. Average. So you buy a piece of real estate, you rent it, and it sits there. Every single year, you're going to have appreciation about 5%. Average, depending on the location, depending on where you are. All right? Second thing, I only have 10 minutes, so I'm going to try to go through quick. All right? Second thing is loan pay down. Pay down. Excuse my chicken scratch. It's kind of tough. But pay down. So any business you have, you're going to have some kind of debt. Some kind of debt. When you put money into it, the business owes you that money back. You're not just giving money away. If you give money away, just give it to me. All right? But otherwise, your business has some kind of debt. So mortgage pay down is crucial for any business. You have to have enough money in your business to pay down your loans and your debts. Every business has debt. Google, Amazon, Facebook, they have debt, billions of debt, but they pay their debt on time because your business has credit also. Your business has credit. If your business has bad credit, you will not get any more debt. If your business has great credit, you can get up to $50 million of debt if you wanted to. If you wanted to. For your business. To do whatever you want, to buy more real estate, to buy more cars, fleets, whatever you want to do. You can get more. But ideally, you want to have some kind of appreciation and some kind of loan pay down for your business that comes, the money comes in. Third thing is cash flow. Cash flow. Cash flow is the lifeblood of your business. Lifeblood. Meaning you don't have cash flow, you don't have a business. Zero. There's nothing free in this world. So you need to build some kind of cash flow for your business. Real estate has cash flow. How? Obviously rents. Rents. I can rent out a parking lot, make money. I can rent out obviously a building, rent out a whole building. I can rent out a room. I can rent out a couch. It's all about cash flow. You build some kind of cash flow for my business. Real estate automatically gives you some kind of cash flow. When you buy a house for yourself, you're not going to get any cash flow. But when you buy a business, when you buy a real estate, piece of real estate, multifamily real estate, you're buying a cash flow. You're buying a business that's going to produce cash flow. That's what you want to focus on, right? Cash flow. And last but not least is taxes or tax break. All right? Every business gets favorable taxes. This country is built on taxes. Taxes. And the reason why a 9 to 5, you look at your check and you wonder, where's all my money going? It's going to taxes. So it's reverse. So with a business, what I do is I produce money, and decide on how much I'm going to pay in taxes. Because I get to write off deductions, expenses, all those things for my business. So understand the difference. When I have a 9 to 5, they take my money first, and then I get paid. As a business owner, I make my money, and I decide on, okay, I have a car, I have insurance, I have taxes, I have a cell phone, I have all these things. The government says, oh, great, you only have to pay this much in terms of taxes. So I get a tax break. Real estate is the most favorable taxes you can ever get. Favorable. I pay in taxes because I have more taxes than my income. Everyone understand that? So I make more money, but I write off even more, so at the end of the year, Uncle Sam gets 0. So unlike you guys, I don't get a return. I just don't pay any taxes. That's the only thing. So that means all the money I make, I get to keep more of it. Understand, real estate gives you this advantage. This is how you make millions. This is how Donald Trump pays $750 a year in taxes. That's how you do it. You produce money, cash flow. Your company appreciates every single year. You pay down your debt, so you build up great credit for yourself personally and your business, so you get more debt. You buy more cash flow. You're not buying buildings, you're buying cash flow. Remember this. For business, for a real estate investment business, you're buying cash flow. So it's about the numbers. If you don't understand how to do the numbers, we have webinars, we have books, we have online courses, we have seminars. I'll teach you how to do this. It's very important. And of course, last thing is Uncle Sam. Understand how to make it and take the best tax breaks for your company, for your real estate investment business. Right? It's vital. It's vital, vital, vital to any business you want to start. If you don't know any other business, I suggest you start a real estate business. If you're thinking about what business should I start a real estate investment business. All right? It's vital. It's crucial for any business. Remember, it's the end goal. It's not to start and doing your business and clean all that stuff. Yes, that's nice and cute to make money, but you should be taking that money and buying a piece of real estate with it. Go back, clean some more, buy some more real estate. So eventually you don't have to clean anymore. This real estate pays you every single month without you having to work anymore. Remember, repeat customers. Once I buy one building, I put somebody in, they pay me every single month without me having to go buy more stuff or clean more houses. Make sense? All right. So understand. And this is for any business, but I'm talking about real estate specifically. All right? This is how it works. What's the end goal of business? Cash. I need cash in my pocket. This suit costs cash. This building costs cash. So how do we do it? Well, first of all, we have to understand something. Every business has assets. Right? Every business has assets. Every business. Every business has some kind of asset. It's either you're the asset, or the building's the asset. For me, I have multiple assets producing money for me every single day. Now, assets produce sales.